Welcome back, traders and investors. My name is Jake Lakier. This is Pre-Market Info. On the line is Dennis Dick, and we also have Eric Muathe from the Educational Trader. Good morning, Eric.
Good morning, guys. How are you guys doing?
I'm doing great. How about you?
I'm doing good.
Awesome.
Excellent. Well,
Yeah.
thanks for being here today, Eric. So we know you've got this product on MarketFi, the Educational Trader, but we're going to get into that in just a second. But give us your quick
Sure.
background here. Like, how'd you get involved in the markets? And, tell us your background.
What's really interesting is the other day I was listening to your guest, Jeff Pierce,
hmm
and, he gave a similar story to mine, and I was wondering what was going on in the late 90s. Obviously we had a bull market, but I came started trading about 1998, 99, when I look back, it's probably because the market was bullish,
Yeah.
having never traded before. The sentiment was, attracting investors. But, began in 99. By about 2002, I had had enough experience after the great or amazing bear market of the tech bubble. So I started my product, which is at Muathe.com, which is my newsletter. And I've been running that pretty much full time since 2002. And, my trading style tends to be 100% on the technical. And, just feel that lately I've had to hopped on the amazing platform on, MarketFi. Otherwise that's my brief history. But, I've really spent a lot of time, what fascinates me more than, is how and why stocks were moving in 99 and the big moves. So that's still, even today, I'm still captivated by what can move a stock. Like, Ali guys were talking about Rite Aid. I mean, the stock was left for dead and,
Yeah.
had an amazing year this year. So what makes something, without looking at the fundamentals from a technical, more like a, chartist of, what moves the stock? And that's pretty much what I try and concentrate on, is trying to find those blockbuster names and what setups are common and things like that.
All right, cool. So what exactly do you trade then? Are you doing like stocks and options? Are you doing futures? Are you doing foreign exchange trading? Like, what exactly are you working with over there?
What's really interesting is I've only traded stocks, never traded an option or
Really?
anything of that. Just I've been on the stock side for some reason. I know, I got, I should probably venture into other parts of the market as the market is evolving, but I've always stayed with the stocks, and I just feel comfortable. For some reason, I tend to understand that more. Nothing against any other platform. I believe the market is broad enough for every type of personality type, and I just find stock kind of make my own trading personality, which is just, and that's just how it is. But so no options, no forex, none of that stuff, but purely stocks.
But that's a great point you're making there, Eric. I mean, find something. I tell this to new traders all the time too, is that you don't have to be good at trading everything. You just have to find something that fits your personality. Find something that you enjoy trading. I've always been a stock guy too. I do the options as well with the stocks because they're kind of tied together. But I don't trade
Uh-huh.
the futures. I have tried to trade futures before. I have tried to trade foreign exchange before. I've always looked at those as saying, and I've never, really been able to find an edge there. With stocks, I can find an edge because sometimes they'll lag the overall market. You can do pairs, you can do correlations, you can do so many different things. With futures, especially if you're just trading the S&P futures, that's just the overall market there. And the other thing I always compare it to is when you're going and looking at like futures or foreign exchange and you're trying to trade those vehicles, you're trading against some of the best traders in the world. You're sitting at poker with, Jackie Chan. You're sitting down at the table with the best players here, and
That's
it's hard to
true.
beat those players. But when you're on
Yeah.
individual stocks, and especially, you can even sometimes look to the mid caps or small caps, there's not as much action there. So a lot of times you're trading against maybe players that aren't as informed as they are in the futures markets. And that's where I find I can find an edge there. So do you kind of feel the same way maybe with stocks? You can get maybe a little bit of a better edge?
I believe so. In fact, really, if you think about it, I think stocks can be boring, but in a way predictable. I mean, they don't have as much pull and tag as, let's say gold or, the crude oil
Right.
futures. It's just so much volatility, and you think you see something on the charts and they just slap you across the face. But with stocks, they tend to be slightly less volatile generally, like especially when you go to mid cap and you can get a trend established for a long time, but when I look at, like, for example, the market yesterday, if you are playing a one or the other, I mean, yesterday's move was profound, just of course it was a Fed, but when you think about it, is stocks generally don't have that, they'll trend high or trend low or break support. Yes, they do reflect. I mean, every market eventually just looks the same on the charts, but I find that stocks, to me, I can kind of figure out what they're trying to do as opposed to trying to figure out what, the complicated markets in the futures are trying to do, because it's a lot of factors, some which you might not be able to see outright, because like you said, it's you're trading the world and you don't know what's moving what and when.
Absolutely. So
Yeah.
what are some like the time frames for your trading? Are you doing like day trading? Are you doing swing trading? What are you looking at there?
I would say swing trading is the profile, because most of my chart reading will be predominantly on the weeklies and the monthlies. So looking to hold something couple weeks, couple months.
Hmm.
Um, yeah, that would be swing trading, and nothing, no day trading, and not because it can't be done. It's just, again, it's just, after you've done it for a while, you figure out some things are for you, and some things are not. So over the course of the last, how many, 12 or 14 years trading, having tried, different time frames, just, I guess for my personality, I would rather see something play out over a couple of days, weeks, and months, as opposed to trying to figure out if it's going to close, in the red and things like that. So my time frame is, and I bet most people are like that, it's more like a swing trader, and that's what, that's to me the sweet spot.
I think you're right. I think that is the sweet spot. And especially like when I came to the markets 14 years ago, and I've been a prop trader here for 14 years with Bright. And we've, it's a day trading firm. So we've been in there. And I think I'm still a day trader where I'm short-term guy, but I'm not a scalper anymore. If you're like really short-term guy and you're trying to pick up nickels and dimes and stuff, you're competing now again against the best players in the world, those high frequency traders that are very informed, have more information than you will, because the top 3 or 4 firms just basically have the books, have the order flow, they have everything on you. So it's so hard to compete in that space. So I think by lengthening your time frame and going into the, maybe in the couple days, couple weeks, it's not as competitive in that time frame. So you can get better setups. But my one question
Yeah.
for you is, and this is something that I've struggled with as trying to evolve from that scalper short-term trader into a swing trader. How do you control your risk? So, like, do you set like stops and profit targets, or like, tell us about a typical trade, maybe even one that you did recently, and how you control the risk and how you figure out when you're getting out.
I think that's something I have to say, even after doing it all this time, is you always get caught saying, no, I'm going to give you an extra 1% before I sell it,
Yeah,
right? I mean, but in the back of your head that there's a percentage that is now you're really pushing. Like if you look at the math, anything past 8% starts being very hard to get back into. I think when the markets are, or when a stock is down 8%, it needs to rally back 11%. When it's down, 25%, it needs to rally back for you to be even. I think it's 50%.
yeah,
And the number just keep getting. So you're basically burying yourself. But I would use stops, a combination of stops and chart setup. If I say maybe you want to sell if the stock breaches some predetermined price, let's say you have a support line or an area in the chart where you think if it goes below that, it's telling it could go lower. So a combination of price, stops, and also chart. So I use a combination of those, and I have to say I wish I could get better at that, as time goes by, because really we can control the downside. Then the upside is really what you're getting yourself more into and increasing your odds for success. So combination of just understanding that once you let stocks go past that 5-8%, you're really digging yourself, because it's going to take a big move to bring yourself back in the black. So charts, and also using the outright percentage loss cutoff point.
Okay, I got you. So are you following like all of the stocks out there? Do you focus on a certain like basket of stocks? Are you trading certain sectors? I guess what are you focused on when it comes to like what stocks you're looking at?
Okay, when it comes down to it, is the way I look at it is, and we all can agree on this, is once you can figure out a trend, which is not easy, of course, but if you can, for example, if you came into 2013 knowing or thinking that gold could be on a downtrend, I mean, we're trading almost 1,200 now. Is despite all the volatility, you'd still be on the right, you know, on hindsight, you'd still be trading gold correctly. Now, gold has been probably one of my best trades this year just because the trend to me seemed like it was breaking. So the idea here is, so what I'm thinking is whenever you're going to find a market is try and figure out what is the big picture, So I personally look at everything. I look at world markets. In fact, I make it a point of making sure I understand the general trend in the world. I look at all the European markets, Asian markets, the big ones, look at Brazil, just to get an idea. I know I'm not going to get it right all the time, but I want to get a general feel. Is this market turning around? Is it, are we breaking out? If markets are breaking out worldwide, you've got to be careful because you can't be short in that kind of an environment, which has been 2013 pretty much. So yes, a big picture, and then I come down to U.S. What's the U.S. market doing? And then from there, I spend a lot of time trying to figure out what are the best sectors. Because, like you all know, if you can find the best sector, if you want to go long, that's good for you. If you can find the worst sector when you want to go short, then you really increase your odds for good gains. So I'm more of a, I would say for my trading style, I want to understand where trends are moving as a general idea because it's very hard to figure out, for me at least, what it's going to do day to day. But I would like to have an idea, is it going to be up in the next 4 weeks, 2 months down the road? Is it looking like it wants to move higher? Then trade according to that big picture as
Are you,
opposed to just trading shorter time frames.
Eric, are you incorporating any fundamentals into that analysis too, or are you doing it pure technically?
It's pure technical. I mean, pure. And the only reason is because I don't think I'm smart enough to understand the fundamentals.
Right.
Because honestly, is a stock can announce one or two things, and the market will do 100 things. So I don't get. I'm not smart enough to figure out how the fundamentals play. I find that to be very confusing.
I think I agree with you somewhat on that. Like, I mean, we can look, we've seen some funny earnings reports here in the last few weeks where you'll see a company come out and they're, miss earnings and it doesn't look good at all. And all of a sudden the company is rallying here. Like even like a KB Homes this morning, it looked like a terrible report, but the stock actually, it's trading down now. It's down 50 cents, but it's trying to hold on. You can see some funny things happen. So I think I try to always be cognizant of the fundamentals, but what I try to
Yeah.
do in my trading is if I'm trading something technically, I try to almost avoid the fundamentals. So I'll try to trade something, when it doesn't have an earnings report coming up in the next few days. Do you try to avoid those fundamental announcements too?
If the only thing I might be avoiding is probably the earnings because those can really,
Right.
mess up. They can change the charts to where you can't have a reason to be holding the position because earnings just came and the stock gapped up or gapped down huge and never looked back. So, you wanna avoid earnings for the most part. But do I really put too much emphasis on that? No. Just because, if you think about it, since we are using charts, we assume that the market should know, at least have an idea what's going on. So you want to believe that the technical outlook is correct, even though the charts can change after a big, fundamental event takes place. So, yes, I do, always have to consider some of the fundamental news, but not too much weight. Most of the weight will go to the charts. Otherwise, it's going to be hard for you to rely on charts as the only source of cues whether to go long or short a stock.
Okay, I got you. So you've got a product on MarketFi, and I'm just wondering like what are you covering there? Are you just kind of going over your trading strategy? Are you kind of giving people trading ideas? What exactly are you doing on that product then?
The educational trader on MarketFi is people can join me on my trades, all my buy sells, and as you know, MarketFi will verify each trade. So it is me trading my best ideas, and subscribers do follow along in terms of what I'm trading, and I make an effort of trying to explain why I'm going long or short a name, so that everybody, as my hope is that we can make money and try and learn from each other by sharing ideas. So pretty much it is market analysis, stock analysis, playing breakouts here or stocks breaking down on the short side. And for the most part, I like subscribers to come in and ask questions, but it is pretty much a trading service in the sense that you'll get my live buy, sell alert, so you can trade alongside me, or at least understand what trades I'm putting on and why. So you can probably trade along or maybe adjust your portfolio, at least know what's going on. And pretty much that's what I do on the MarketFi educational trader platform.
What stock are you eyeing up right now? Do you have a trade that you're in, or do you have a trade that you're eyeing up and looking to get in here right now? Give us a tip here today, Eric.
Well, the thing about it is, outside of yesterday's move, I was really thinking, and I still believe that, to me, the real estate sector seems to be rolling over. That's one place I'm watching for that confirmation of a break, because if you take a look at the monthly for the IYR and draw a straight line, just connecting the closing prices on the monthly, going back to '09, we broke that trend line on the monthly a couple months. I think this month we are breaking it. So yesterday looked like they were really confirming that push. So my best idea, to be honest with you, is short the real estate sector if they break that trend now. On the other hand, I noticed with yesterday's move, some of the charts on the dailies are changing, and it just remains to be confirmed whether they're going to move higher. But that would be my best bet. I believe 2014 might not be as kind for the real estate sector now. Of course, I don't know, because the charts could change for us. But given the charts today, I would say that's my best idea. On the short side, the real estate names to me seem like they're rolling over for some reason.
Do you have anything on the long side that you're eyeing up here? We're at like 8 points off all-time highs. Are you just placing like bearish bets here, or do you think you have some sector or a specific stock that you're looking at from a long side perspective?
Honestly, if I was to place a trade on the hoping for end of year rally, I would go long solar names, because I noticed they're starting to, after they had pulled back for a couple of weeks, they're starting to bounce this week. I'm not very convinced that they're really going to hold, but I would say right now, unfortunately, if you consider yesterday's move, most of my positions, if not all, are short, and by way of ETFs. So that would be my position. Just waiting to see whether the market can take out the highs, and maybe that idea is going to be for not. But for now, position predominantly on the short side.
What about Twitter or Facebook? Do you ever trade those things? We always like to ask our guests.
Yeah, absolutely. I don't trade them, but I watch them because I know subscribers do, and they ask. I was looking at Facebook, and Facebook, when it moved above 50.23, which is the previous monthly closing high, that was a buy. But I noticed, yesterday it closed positive, but I noticed it was struggling to hold the previous weekly and daily closing high of 54.22. So I think Facebook holding above that weekly buy point or threshold of 54.22, which is also the daily high, then it could have a chance to move high. But if it moves back below those levels, I believe that it could be short at this particular point. As for Twitter, I thought once it moved above 44, which was the initial or the week one closing high, above 44, I thought it was going to take off, and it did. But what surprised me was the move. The move was huge.
Unbelievable.
So that was absolutely. I mean, no stops, just straight. I mean, talk about confusing everybody. And I guess this is why we still trade these markets, because you never know, and you never, your experience is not going to mean that you're going to understand what's going on. You just might appreciate or might be more relaxed when you see things going on. But Twitter was a good surprise. I believe if I was to go along Twitter today or around this time, I would wait for it to break out again above 59, which is right now the most recent daily closing high. And that would be, how I would approach that. Otherwise, I'm not sure that they hold above those levels on the daily, watching them. we'll see where we close today and for the rest of the week. But if they can't hold those daily, like if Facebook can't hold about 54.22, I believe it's stalling, and probably the next move could be lower. That would be my bet.
All right, awesome. Well, thank you very much for joining us this morning, Eric. This has been awesome. We'll definitely have to have you on again. Love getting your outlook here on some stocks and hearing about how you dive into various trading ideas. We're gonna take a very short break here, real quick, and and when we come back, we will have Muddy Joe Young giving us the morning headlines. We'll be right back.